Multiple lifetime highs across the major indices, a calmer volatility background, and a rally broadening beyond the usual suspects in technology. The three big stories that opened the show. Here's why we are where we are. We have easing financial prints in the data versus expectations, and that has relit risk appetite while the Fed stays patient. Trump and Jay Powell are still bickering. They're gonna bicker as long as both of them are breathing. But sooner or later, the Fed is going to relent and lower rates, or they're going to have more Fed governors resign. A one-factor market meaning just technology or just quantum or just AI stocks going forward. What could derail this? Stretched multiples. In other words, stocks that are priced too high in the pockets in tech. A policy headline that spikes inflation. The Dow has not been participating to the same degree as the Nasdaq and the S&P 500. So near term, the path of least resistance remains higher as long as earnings confirm and policy stays predictable. Right now, earnings are on track to be really strong for a summer quarter. What's in focus right now is immediate expensing for factories through 2028, and that is having a real CapEx pull forward potential, meaning that construction, industrials, and onshoring companies are building up their inventories, they're adding on to their physical building structure, and that's a positive. Personal tax tweets, things like tips, overtime, senior deductions, aiming to nudge disposable income higher are working. Nvidia now at $4 trillion. Brilliance meets basic risks. Here's the giant truth. Nvidia's AI dominance is powering index-level returns and CapEx cycles from chips to data centers, software, and utilities. All right, it has become the single most important stock in the world and frankly, in history. Thanks for listening. I'll dig deeper into all of this on the next show Thursday night. Stay with me. We will see you next week on the Weekly Market Update.